An IMF team has landed in Bangladesh, and what they find could shape the country's financial footing for years to come. The International Monetary Fund has sent a delegation to Dhaka to assess whether Bangladesh qualifies for a new loan agreement with the fund. This is a formal review, the kind the IMF conducts before committing fresh financing to a country. The mission will examine whether Bangladesh has hit the benchmarks the fund typically requires: adequate foreign currency reserves, fiscal discipline, and progress on structural reforms. Bangladesh has been under real pressure. Its foreign exchange reserves have eroded over the past few years, squeezed by the aftershocks of global inflation and a stronger US dollar. When the dollar rises, it makes imports more expensive and raises the cost of repaying external debts, most of which are priced in dollars. That dynamic hits emerging market economies especially hard, and Bangladesh is no exception. IMF loan programs do not come free. In exchange for access to funds, borrowing countries agree to a set of policy conditions. Those typically include reducing budget deficits, reforming energy or food subsidies, and strengthening the independence of the central bank. The logic is straightforward. The IMF wants to see that a country is putting its finances on a more stable path before it extends support. But those conditions often require painful short-term adjustments. For governments managing tight budgets, and for households absorbing higher prices or reduced subsidies. Bangladesh is not alone in this position. Several emerging economies have turned to the IMF in recent years as global borrowing costs surged following the post-pandemic inflation wave. The fund has been actively engaged across South Asia and elsewhere, helping governments stabilize currencies and rebuild depleted reserves. What makes this review significant is what it signals beyond the numbers. Investors and creditors pay close attention to IMF engagement. A successful review, one that leads to a new deal, would likely strengthen confidence in Bangladesh's financial stability and its ability to meet its obligations. A breakdown in negotiations, on the other hand, could raise concerns about the country's near-term funding outlook and its access to international capital markets. The mission is still in its early stages, and the outcome is not yet known. But the stakes are clear. Bangladesh needs to demonstrate it has made enough progress on the conditions the IMF has set. The fund needs to assess whether fresh financing would be well placed. For anyone watching emerging market risk, the signal to track here is not just whether Bangladesh gets a deal, it is how quickly and on what terms. That tells you something real about the country's economic trajectory and the durability of any recovery it is trying to build. This briefing is brought to you by First Financial News, clear daily coverage of the economy and markets at firstfinancialnews.com.